When it comes to credit card purchases, passing the merchant account fee along to the cardholder at the point of purchase is becoming commonplace, but there's often confusion between how to do it and how to do it the right way. There's surcharging, cash discounting, and service fee programs. The terminology between these three sometimes run together, so they're sometimes confused. And today we're going to take a look at all three so you can make sure that you're using the correct program if it's something that you're looking into at your business. When someone generally refers to surcharging a credit card purchase, it causes some confusion as to which of the three programs they're actually referring to. All three of them have subtle fine line differences that separate them. So again, today we're going to look at those and I'll give you references to more information on each of the individual programs and how to set up each of these within your business. So to start, the three of these programs share the same simple fundamental as I've mentioned, and that is that the cardholder ends up paying the credit card processing fee either in full or in part when they make a purchase, therefore absorbing the cost of paying the credit card fee for the benefit of paying with their debit or credit card. And the result is that the business owner, you, get to keep more of the money from the sale. The nuances of which program is right and best for you and which one your business should use is coming up shortly, and I'll give you a little bit of a spoiler alert. It depends on the technology, the credit card association requirements, and the state that you live in, because those things follow each individual program. So let's start comparing. The easiest way to remember the difference between these programs is to know that they actually operate just like their name implies. So just think of listed and stated price of a product or service. That's going to be the terminology that we use. A surcharge program is the process of adding a fee on top of the original sale amount of a product or service. So it's in addition to and on top of a price point. A cash discount program is the process of giving a discount if someone pays with cash. So if a customer elects to pay with cash versus using a credit card, they would pay a cheaper price or a lesser dollar amount for the product or the service in question, hence the cash discount. It's pretty straightforward. And finally, a convenience fee is typically a flat fee that applies to making a purchase. There's a max percentage limit as well as guidelines for each of these programs. So first, let's take a look at the cash discount merchant account program. You've probably seen this before. It's been around for quite a while, and historically, gas stations have used cash discounting, and they would be a great example to illustrate this. They would post normal pricing on their signs as well as a cash price that was less expensive, right there on the sign, out there in the open for everyone to see. So while gas stations have used cash discount merchant account programs for years, the trend is now increasing and other industries are actually jumping on board and starting to adopt this trend as it grows in popularity. More and more companies are starting to use it. So on a quick side note, Visa made a rule that restricted cash discounting because arguably it discouraged the use of credit cards in some cases, and the banks and the credit card associations didn't necessarily like that. The Durbin Amendment overturned that as they made it legal to give a cash discount or an incentive discount as it was referred to, and that made it okay to give the cash discount, so it was actually upheld. Historically, with cash discounting, it dates back years and years, and there was nothing special you needed to do with your merchant account in order to offer a cash discount. You just signed up for the normal account and posted a cash price and then honored the price by giving a verbal discount at the point of sale. It was pretty straightforward and simple to use. In a traditional purchase with a credit card, if a customer was buying something for a listed and stated price of $100, they paid with a credit card, you, the business owner, ran the charge on the credit card terminal for $100, and you would be billed the merchant account fee of, let's just say 3% to use round numbers for the sake of this illustration. You would net $97 for that purchase, and if that customer offered to pay you with cash, you would just discount and give that product to them for $97, and that is the cash discount. discount. So the customer does actually end up paying the extra fee by paying more for their product if they want to use their credit card. Again, this is the way it's historically been with cash discount programs. Nowadays, you can still do it that way, and there's actually a new type of cash discount program that's very popular, and it looks, feels, and operates a whole lot like a surcharge program, but it is a legal and compliant cash discount program, and more on that in just a minute. With that, let's jump over to the Surcharge program. Surcharging passes the merchant account fee along to the customer by adding a fee on top of the listed and stated purchase price as noted earlier. So at the point of sale, the customer voluntarily accepts additional processing charges for the purchase because they're paying with a credit card, and the amount to be charged is usually about 2 to 3% and cannot be more than what the merchant account provider is charging to you as the business owner and the holder of the merchant account. The business cannot make a profit by surcharging, so the surcharge exists only to offset the fee that would otherwise be paid by the business owner of the merchant account by once again passing the majority or the entire fee along to the customer when they're making a purchase. So with that same hypothetical customer that was buying something for $100 and they paid with a credit card, this time you would run the charge and the software would add a 3% surcharge to the purchase, making the total to the customer $103, and you would then net $100. So between these two programs, you can see that there's actually a pretty big difference in what the customer pays and what you're charged. Merchant surcharge rules have sort of a difficult past. Historically, there were federal and state bans that restricted surcharging, and there was a lengthy lawsuit that went on for a number of years that challenged the ability to pass a surcharge along with a credit card purchase, which was eventually upheld at a federal level and then trickled down to the state level. At the time of this video, there's currently about 6 states that prohibit surcharging still on a credit card purchase. Other merchant account surcharge rules and regulations include having proper signage and public notification on invoices and in retail storefronts if there's going to be a surcharge assessed. Surcharging on a debit card purchase is restricted, and this also includes prepaid cards, meaning it's simply not allowed under surcharging programs. So you can only surcharge a purchase if you've followed all the rules and regulations to set up the program properly and the customer is paying you with a credit card. And finally, proper registration with Visa, MasterCard card associations and all the card brands for that matter is required 30 days prior to the implementation of a surcharge program. So you need to plan ahead a little bit if you're going to put this into practice. Finally, you'll need a software or a point-of-sale device that properly assesses a surcharge and adds it to the receipt so that it shows a surcharge in a separate line item. I've personally talked to numerous businesses who have been unknowingly breaking these surcharge compliance rules by just implementing the practice without notifying anyone. They didn't tell Visa, MasterCard, they didn't tell their merchant account company, they just started adding the percentage rate to their invoices and to their products. And if you get nothing else out of this video, remember that is not the way that you want to go about doing it. There are some stiff penalties for breaking the rules or trying to get around them or bend them in any way. So you should always notify customers up front. You should register properly. Make sure you're going through the proper procedures to implement a surcharge program if that's what you're going to end up using. Finally, let's touch on the service or convenience fee program. Convenience fees are most often used, as you probably know, in association with municipalities like driver's license renewals, utilities, government websites, associations, other state nonprofit run purchases and organizations. And convenience fees also help offset the merchant account charge for most buyers. Again, from their standpoint, it does just what it says from the customer standpoint. It gives them the ability to pay with a credit card electronically, and again, oftentimes online on a website, so that the alternative of driving somewhere to pay cash, writing or mailing a check is no longer needed. The price of the convenience fee is less than actually taking the time out of their day to go and do those other things. Generally, a convenience fee is a flat rate rather than a percentage of the purchase, and most of the time a convenience fee is not permitted to be above 4% of the purchase. Convenience fees are not permitted in standard transactions where a customer pays for an item at a register, which is why they're really only used, as previously mentioned, in an online online scenario. Just like cash discount and surcharge programs, the convenience fee must be disclosed as a separate line item of the purchase. And that brings us back to the emergence of the modern day cash discounting program that I mentioned earlier. With the increase in demand for surcharging programs in general, payment processing companies have developed proprietary software that legally complies with cash discount programs as set forth by the Visa and MasterCard associations and state laws, but they act like surcharge programs. So the point of sale software and the credit card terminals automatically calculate the fee for all purchases that are run through that terminal, and will even show an extra fee on the receipt separated properly the way it's supposed to be, so you can run everything through your merchant account and be 100% within compliance. Just like surcharging, the cash discount fee is applied and cannot exceed 4%, but this program has fewer restrictions because it's accepted in 50 states, and it's exempt from the debit card rule, so you can accept debit cards with this program as well. So just to be clear, your credit card terminal or point of sale device will automatically adjust to include a percentage discount fee in addition to the original charge, and the fee is labeled as a cash discount fee rather than a convenience fee or a surcharge. I've put together a separate video on this type of cash discount program and how to use one and set it up for both online and retail businesses. So if you'd like to learn more about that, be sure to check the links in the description or click the one on the screen to watch that video. If you're looking for specifics on the exact costs, rates, fees, pricing, equipment, and all of the variables that would go into a cash discount program like this, check the links in the description to go to our resources page, or even schedule a call with one of our team members. No matter what name you call it, if you're passing a fee along to your customer, make sure that you're following the proper regulations set forth by the card associations as well as the merchant account provider that's giving you access to the merchant account program. And one final note about payment structure. Surcharging programs are very different than simply taking a fee off the top of a purchase like you would if you were brokering a service or if you were running a marketplace or a membership environment. There's a lot of talk about payfac, payment facilitators, and if you're moving money, you retain a portion of that purchase for yourself, either as a commission or a fee of any sort. You're not in a typical surcharge or cash discount environment. You're in a type of payment facilitator environment, and that's very different entirely than any of the programs that we've talked about today. So if you want to learn more about those, there's separate videos and separate links in the description on those topics. So if you're new to the channel, welcome. If you like the content of this video, please give it a thumbs up and share it with a friend. That's always appreciated, and it helps the content get found. If you want to talk specifically about the needs of your business, book a call with the appropriate links, the appointment links in the description. Be sure to subscribe so you don't miss out on any future videos on the topics of payment systems, integrated payments, point of sale systems, and general credit card and payment processing tutorials. I'm Brian Manning, and I'll see you on the next one.